Hey everyone, welcome back to Corporate Decoder, the place where we make sense of corporate filings, and trust me, some of them need decoding. Today we're diving into Zai Lab's latest proxy statement. Don't worry, it's not as boring as it sounds. Think of it as peeking behind the curtain to see what's really going on with this biopharmaceutical company. It will have some spicy stuff, so hold on to your hats. This document is essentially a guide for shareholders voting on important company decisions, like who gets to be on the board and what the auditors get paid. It also includes some executive compensation information, which is always interesting. But more than that, we can infer where the business is heading, what risks they are seeing, and what are the important matters for the company. First off, this is a notice that the proxy materials are available online. This means Zai Lab is saving paper and money, and you're saving trees by not printing a potentially hundreds of pages document. It also gives you a heads up about the annual general meeting of shareholders, which is where these important votes take place. The meeting is scheduled for June 18-25, both in person in Shanghai and virtually, so shareholders all over the world can attend. The main purpose of this meeting is to elect directors. These are the people who oversee the company's strategy and performance, essentially acting as representatives of the owners or the shareholders. All 9 current board members are up for re-election this year. The board recommends voting for all of them. They believe each nominee brings valuable experience and skills, which is pretty standard language in these filings. However, it's important to note that one of the directors, Nisa Long, has been on the board for over 9 years. While the board says she's still independent, it's worth considering how long-term relationships might influence decision-making. Let's look at some of the key nominees. There's Samantha Du, the founder, CEO and chairperson. Having the CEO also chair the board can be a point of debate as it consolidates power, but the company feels she's the best person to lead given her deep understanding of the business. Then we have John Diekman, the lead independent director. His role is to balance Dr. Du's influence and ensure independent voices are heard. The board believes he plays a critical part in the company as well. There are 7 other directors to consider, each with their own expertise in areas like finance, medicine and venture capital. Moving on, there's a vote to approve the appointment of KPMG as the company's independent auditor. This is important because the auditor is responsible for making sure the company's financial statements are accurate and reliable. Think of them as financial referees keeping everyone honest. The audit committee, which oversees the company's accounting practices, recommends voting for KPMG. Shareholders are also being asked to authorize the board to set the auditor's compensation. This might seem minor, but it's about giving the board flexibility to make sure the auditors are paid fairly for their work. Companies can't always know how much they will need to pay auditors at the beginning of the year, for example. There might be unexpected issues that require extra time and attention. Here comes the say-on-pay vote. This is a non-binding advisory vote on executive compensation. It's essentially a chance for shareholders to voice their opinion on how the top executives are being paid. The board recommends voting in favor of the current compensation packages, arguing that they are designed to attract, retain, and motivate strong leaders. However, it's up to the shareholders to decide if they agree. Now, we're getting into some more complex stuff. Proposal 13 is about approving a general mandate for the board to issue new shares or ADSs. This is a request for permission to create and sell up to 10% of the company's outstanding shares. This can be useful for raising capital, but it also dilutes existing shareholders' ownership, so it needs careful consideration. Zai Lab says they need this flexibility to fund research, development, and strategic transactions. The final proposal is a general mandate to repurchase shares. This gives the company the authority to buy back its own shares in the open market up to 10% of its outstanding shares. This can boost the stock price and return value to shareholders, but it also requires the company to spend cash. The board believes having this option is in the best interest of the company, which is basically what any company would say. There's an explanatory statement that goes deeper into the share repurchase plan. It explains how many shares could be bought back, around 110 million, using April's numbers as a base, the reasons for doing so, boosting share value, and the possible impact on the company's finances. Interestingly, it mentions that a full repurchase could significantly impact the company's working capital, but that the directors don't intend to affect company too negatively. This section also notes that the company did not repurchase any shares in the preceding 6 months. Let's take a quick look at who's running the show. We already talked about CIO Samantha Du, but there are other key players. Yajing Chen is the Chief Financial Officer. Rafael Amado leads Global Research and Development. F. Ty Edmondson is the Chief Legal Officer, and Joshua Smiley is the President and Chief Operating Officer. These are the people driving the company forward, so their expertise and experience are crucial to Zai Lab's success. This section explains how Zai Lab pays its executives. The goals are to attract top talent, reward performance, and align executive interests with shareholder value. The company uses a mix of base salary, annual bonuses, and long-term equity incentives like stock options and restricted share units or RSUs. It is mentioned that they engage with shareholders to make sure everyone is happy with the leadership's payouts. They increase the weighting of corporate performance for the annual incentive awards and adding performance share units or PSUs into the annual long-term incentive mix for 2025 to further align executive compensation and company performance. Now for some real numbers. We learn that CEO Samantha Du's base salary was raised to $908,730 in 2024. That's up from $878,000 the previous year, a roughly 3.5% increase. Other executives also saw salary increases, with Yajing Chen getting a bigger boost of 15.6% due to a promotion to CFO. These adjustments are designed to keep compensation competitive and reflect individual contributions. A big factor in executive pay is how well the company performs against its corporate goals. In 2024, these goals included regulatory milestones, clinical trial progress, business development deals, and commercial success. While Zai Lab achieved many of its goals, some studies were delayed or deprioritized. In the end, the compensation committee decided on a corporate multiplier of 103% for the executives. Individual achievements also played a role for the named executive officers. Other than the CEO, equity is a big part of the compensation picture. These awards come in the form of stock options and restricted share units. The idea is to incentivize executives to increase the company's value, since their own wealth is tied to the stock price. Samantha Du's total target equity incentive award was valued at $8.5 million. 5 other executives received amounts ranging from $2.1 million to nearly $5 million. While other executives received amounts ranging from $2.1 million to nearly $5 million. In this section, we can see who has what for stock and option awards. And the last section here is on payments in the event of leaving or changing control. If there is a change of control, all of them will receive hundreds of thousands of dollars as severance and equity acceleration. Non-employee directors get an annual cash retainer of $50,000. There are additional retainers for things like being the lead independent director or chairing a committee. They also get stock awards. Lastly, KPMG was paid approximately $3.5 million for audit fees in 2024. Time to see who owns what. Of the directors and named executive officers group, it appears Samantha Du owns most of the shares, 3.59%, while others have less than 1%. Wellington Management Group LL is the largest outside investor at 9.19%. Now let's step back and look at the big picture. Zai Lab seems to be on a solid path. The company seems to be making all the right moves, has a solid product pipeline, and the financial incentives for the leadership are structured in a smart way to increase value. They did not reach their revenue growth targets. That has to be taken into account. Some risks include the inherent uncertainty of drug development. What looks promising in the lab might not pan out in clinical trials, and there are always regulatory hurdles to clear. But overall, the company seems well positioned for future growth, especially with its strong presence in the China market. I would say that Zai Lab is a company that is going in the right direction and is worth keeping an eye on Tavlink. Thanks for watching Corporate Decoder today. Like, comment, and subscribe for more deep dives into the world of corporate filings.